Happy day to you. Happy Friday. This is Mornings with Michael, not necessarily every morning as it is afternoon here on the West Coast. This is for information, educational purposes only. Movie or a series that I'm watching on Netflix, I highly recommend, is about David Beckham, the football or soccer player. And let's get to the news. Producer Price Index showed wholesale inflation up 0.5% in September. Goods were up 0.9%, services up 0.3%, final demand up 2.2%. And the consumer price index, core inflation, is up for the year 4.1%. Consumer prices rose 4.4% in September, down from the 0.6% in August, but still not good. Food and energy up, with food being up for the third straight month. So that's it on our inflation report. Let's take a quick look at our S&P 500 heat map. Looks like tech is being routed today. Financials are a mixed bag. JP Morgan up. Some of the banks are beating their earnings estimates soundly. Wells Fargo is up, it's like 3%. And energy is up. So that's look. Not sure if I shared that. Let me just share screen so everybody can see that, what that it looks like. Consumer defensive is up. So there you have it. Amazon is down 2%. Tesla is down almost 3%. And let's show a personal. I cannot find that right now. Excuse me. Just when I'm about to speak, I get choked up. But here is our personal pension or annuity. If the coming months market does pull back sharply, like many expect, this is where you'd want to have your money, where you lose no money, you lose no sleep. The index investing bobs and weaves, where annuity rises and does not come back down. And many annuities are offering a 40 to 45% bonus right now. And this is how the average annuity's annual growth beats index investing by about 5% per year. So that's that. Share our screen here. Looks like the oil tankers are starting to move up again. We'll take a look at them a little further. First, let's take a look at the cryptocurrencies. They're kind of basing up and down motion, no trend focusing. And Bitcoin is in downward trend. So let's go to our dollar index. Had a pullback for a little over a week. 1, 2, 3, 4, 5 days. And now it is trending up again. And that's going to be hard for multinational stocks to make any movement. Here's the bond yields. They did spike yesterday because they had a terrible auction of treasury bills. So they had to raise interest rates, get people interested. And Here is, they got a little bit of a pullback again today. So we'll just have to see, look at a broader picture on the weekly. It is just going up to some of the highest levels we've seen in a number of years. Look back at the monthly. You have to go back to right before 2007, and then we know what happened in 2008. So that's kind of danger facing us. Take a look at the 20-year. Got a pullback as well today. Look at our volatility report. Had a spike above 20 today, where then it pulled back. So the S&P, I would think, would be down, which it is, down heavy today, down 0.6%. The NASDAQ is down heavy, down 1.34%. Small caps, down 0.83%. They're down 3 days in a row. The Dow tried to go up, and now it's on its low. Look at the equal weighted S&P 500. Looks very similar to the regular S&P. And the equal weighted NASDAQ falls to its 20-day moving average. Is this developing a handle? We'll just have to wait next week and see. Danger is that many people believe that the bond yields are going to continue to rise. And this will, as they rise, it will prevent our government from overspending. Maybe it's a good thing, because most of the money is going to be going to pay interest on the debt. Look at a couple of ETFs. Oil popped a big time today. Had a 3-day pullback after rising on the Israeli conflict, and is bouncing up again today. Look at energy gapping up. It kind of held strong, even though it had 1 day it gapped down. Producers and drillers gapping up today above its 50-day moving average. Communications down big today as Google and Facebook retreat. Financials pulling back as well, even though the banks did well today. Real estate, I would think, would be pulling back. Yeah, 2 days in a row. Our housing home builders down as well. Metals and mining tried to move up and then closing on its low. Building materials continues down. Semiconductors down big time, down pretty hard with some pretty good volume there. Infrastructure down hard. Airlines, you would think it with the oil prices jumping up, that's going to prove difficult for them. Software, a little bit of a pullback, not too bad. The volume was pretty low. Technology, volume was a little stronger there and a little stronger pullback. So that doesn't look so good. And take a look at biotech. Biotech is bouncing today on both indexes. They are severely underwater. Let's go to our news. China Consumer Price Index was unchanged in September from a year earlier. Producer Price Index fell 2.5% from a year earlier, 12th straight month in negative territory, I believe, for China. Outbound shipments in September declined 6.2% from a year ago. And now on to our sector in the consumer. Dollar General announced Todd Vassos, current board member and former chief executive officer, has been appointed CEO effective today, and their shares are gapping up. Investors really like that, and we got a lot of people buying on that news. Kroger's $24.6 billion acquisition of Albertsons concerns the deal could hurt consumers and workers, Attorney General Rob Bonta said Thursday in California. And Kroger is down some, and so is Albertsons, down a little over 1%. Go to financials with banking. JP Morgan gapped up and then closed on its low. Quarter three EPS $4.33 versus $3.20 year over year. Quarter three adjusted revenue $40.69 billion versus estimate of $39.92 billion. Wells Fargo, which really beat. See what Wells Fargo did. They gapped up and they're holding more of their gains, up to almost $41 a share, up approximately 3%. Huge volume. Earnings up 6%. Earnings surprise of 12.5%. BlackRock, quarter three EPS at $10.91 versus estimate $8.20. And their stock is trending down. Was a positive surprise of almost 31%, but not good enough. I guess they were expecting more. Discover Financial Services, credit card delinquency rate at 1.63% at September end versus 1.51 at August end. Stock is down in the news. Lending Club sees quarter three revenue 198 to 200 million versus consensus of 199.42 million. And their stock is down on that news as well. United Healthcare, quarter three adjusted EPS $6.56 versus $6.32. And it's gapping up and it's holding most of its gains. Earnings up 13%, a little over 7%. Earnings surprise. And as we showed earlier, the biotech ETF, XBI, hit fresh 52-week lows on Thursday on rising yields. Financing becomes a serious issue for small biotech with rates as high. Wait till it goes higher. Nuvalent announced updated preliminary data from phase 1 dose acceleration portion on its ongoing ALCOVE, ALKOVE-1 phase half clinical trial. And their stock sold off and pretty hard and is tried to bounce back at the close. Outside Medical sees preliminary quarter three revenues of 9% year over year at 30.4 million, but below consensus of 36 million. And it is down heavy. So the gap down yesterday, somebody must have known something. Relay Therapeutics announced that initial data from a key cancer trial came in better than expected. And the company extended its cash runway after a pipeline change, and their stock did not improve on this news. Technology, media, and telecom, Comtech Telecom, quarter four adjusted EBITDA 18.9 million versus estimate of 13.23 million, and it gaps up and holds most of its gains. Huge volume, earnings up 21%, almost a 49% earnings surprise. Smart Global, quarter four EPS 35 cents versus 45 cents. And people did not like this one bit. Down 44%. Wow. And look at all that volume, people jumping ship. Belden guided quarter one revenues about 625 million versus estimate of 685. And once again, nobody likes a loss that big by missing your estimates that big. So it's down 26%. Applied Materials and Lam Research were both upgraded to buy from hold at Needham. Didn't help Applied today. And didn't help Lam Research today. Both of these stocks were upgraded. And the Needham sees resilience from Applied Materials, expects memory WFE to normalize at 40% of total WFE by 2025. Netflix downgraded to peer perform from outperform at Wolf Research without a price target, saying the company's 2024 average revenue per user expectation looks full, while today's paid sharing net additions will lead to tomorrow's gross ad shortfall. And so Netflix continues to fall. And Microsoft, $69 billion acquisition of Activision Blizzard, ATVI, was finally cleared by UK regulators on Friday after it forced the Xbox owner to sell streaming rights to games, including Call of Duty, to address its competition concerns. And Microsoft is off, and Activision is pretty flat. So that's our news for today. Let's go see what's trending, where the big money is flowing. I looked at JP Morgan before. Take another quick look. Up 1.59%. Volume change up 229%. We've showcased this stock before. Continues to get a bids and keeps moving higher and higher. The weight loss drug news yesterday, I believe it was yesterday or the day before. Huge volume, and the stock just keeps going through the roof. Progressive gaps up today. Earnings up 845%. And this is only a 10% earnings surprise. Wow. Gaps up and closes on its high. 161% volume increase. Ferrari up slightly, closed on its low. So volume, there's a lot of volume today, but apparently there's a lot of selling volume as well. Here's something with a war going on, two wars going on, I guess you could say. And Aero Environment gapped up, heavy volume. Next year's earnings are supposed to increase 113%. We'll take a look at owners and funds. 57% funds are invested in this. 349 moved up to 359 in December of 21. I'm going backwards. June of 23, 401. September 23, 404. As we see, we're just gradually growing the funds investing in here. Lord Abbott, a top fund, is one of the top funds in it with an A+ ratings. We looked at this international tanker before. It's up strong today. Some pretty good volume. Take a look at TK Tankers, up pretty strong as well. I guess you could say that this would be an aggressive buy here. It's got everything you're looking for. It's breaking out on huge volume. This year, its earnings are up 123% estimate. So look at VRT, was up. Looks like 5 days in a row, and some people took their profits today. Pretty huge volume on that. Let's look at Vertex, breaking out today. Little flat base consolidation. I guess you could call this a saucer as well. Up 0.75%, volume increased 24%. Veronis got a volume change, but stock really didn't move too much. Up nearly 2%. I believe this is Light and Wonder, global gaming company, develops products and services for gaming, lottery, and digital gaming industries. It's up pretty strong today. Not sure if this is a breakout here, but it deserves watching. Earnings are supposed to go up next year 132%. Finally, the positive side, Lululemon tried to move up further and sold off to the end of the day near its low for the day. Volume was up. Harmony, people are packing up their bags and leaving. Up 31% drop. Did try to crawl back a little bit. Harmony Biosciences. BDC, Belden, I think we looked at this in the earnings report, off 25%. Circor International, valves and fluid controls dropping 4.5%. Pretty huge volume. There's an interesting ticker symbol, MEO. Methanex, methanol gap down, close to the high for the day, down 4%. Sterling Infrastructure is down heavy, tried to come back today. It's down, still down about 7% for the day. And money just continues to flow out of this company. InMode gap down yesterday and continue to go down. I'm not sure if being an Israeli company has anything to do with it. but looks like non-invasive cosmetic procedures with all the inflation we have around isn't going to be a high priority. Intercept Pharmaceuticals down a little bit after a huge gap up and working on a flag pattern. There's our market closing for the day. That's everything for where the money is moving. And let's see. We got a food delivery company. Just get to it. This looks like DoorDash is moving today. It's moving in the wrong direction. If you are a holder of the stock, down nearly 6%. Can you tell anything from this chart? You can tell a number of things. One, there's a lot of red bars here. There's a lot of sellers. So earlier you can tell that people wanted out of this. 1, 2, 3, 4 days here. We had a blue bar, but it wasn't anything close to the red bars. So we got 1, 2, 3 heavy selling again, and more heavy selling. 1, 2, 3, 4. It just tells you you don't want to be anywhere near it. With all the companies on the market, a person should have maybe 3 to 6 stocks in their portfolio. This should not be one of them. All the warning signs are right here in front of you. Sure, it has a high relative strength rating, but this is looking backwards. It hasn't hit a new high or even close to it. Look at that space between the bar. It's trending down. So it's got 19% to get to a pivot price. You just want to stay away from it. Take a look at the funds. The funds are growing 50%, but they're not going to call you up and tell you when they're selling either. So that's kind of how you read a chart. Says that earnings are going to increase to $1.20 this year. There's no guarantee that they'll hit that number. So these are warning signs along the way that if you held the stock, you should probably get out. If you had this nice run or broke out here and ran up to here, should have taken a profit at 25% and maybe a third off, and take another third off if it gets up to 30 or 40%, and then you can hold the last third. But you may want to just move on to something else at this point. So that's my essay for today. Today being Friday. Hope everybody has a great day, great weekend. We made it to the weekend. Enjoy the fruits of your labor. Continue working on your goals and your activities. And if you have any financial goals that you want to discuss, feel free to reach out to us. In the meantime, this has been Mornings with Michael for information and educational purposes only.